QuickBooks Pro Desktop 2021. Enter transaction purchasing inventory using bank feeds. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our bank feeds test file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. In prior presentations, we have uploaded information from the bank so we can practice with the bank feeds. Now we want to think about inventory, which is often one of the more complex kind of issues that can take us off of a strict cash basis system and make us have to do some accrual type of transactions, or at least think about how the flow of inventory will affect our bookkeeping system. To do that, let's open up the financial statements by going to the reports dropdown, company and financial. Let's open the balance sheet up first this time. Balance sheet account, going to customize reports up top, and I'm going to change the dates from 01/01/20 to let's say 12/31/20 and run that report. So now we have our checking account up top. We purchased equipment here, and then we have our net income down below. Let's open up the P&L, profit and loss. Reports drop down, company and financial, profit and loss. And then I'm going to change the dates up top from 01/01/20 to 12/31/20. Here's our income statement. So this represents us on the expense side of things, which is all we've been looking at so far, recording the expense. And if you're using an accrual basis, which will be required to some degree, at least for taxes when inventory is involved, so you have to make sure that you're in compliance with whether or not you need to have an accrual basis, at least for the taxes and any kind of other regulatory requirements you might have for the accrual basis as well for the needs of your financial statement. Then you're going to have to think about how are you going to record the expenses. It's going to be when you consume it, and typically that would be in the form of cost of goods sold. So a couple different ways you can think about the inventory. That if you have limited amount of inventory, if I go back to the balance sheet here and I basically buy the inventory and then I sell the inventory, and I don't hold on to the inventory that much, then I might try to be on a cash basis still. The easiest thing to do would be to stay on a cash basis, meaning I'm not going to put the inventory on the books ever as inventory, because that takes another step. Instead, you can just basically go to the P&L, and when you purchase the inventory, you just record it as cost of goods sold, even though you're basically recording the expense before you have incurred it on an accrual basis, because you don't incur the expense until you sell the inventory. But if those two things happen relatively soon together, close in the same time period, you might be able to get away with that kind of system. However, if you're holding on to inventory for a longer period of time, then you can't really do that at some point and have an effective bookkeeping system. So at that point, then you're going to have to track the inventory on the balance sheet. So that means when you buy it, you're going to have to put it on the books as an asset. Now, that's not too difficult to do from just an account system, meaning I could do just the same thing we did with the equipment, and just every time I purchase inventory, I put it on here as an asset as opposed to an expense account. That's not difficult, but when I put it on the books as an asset, then I'm putting it on the books as a dollar amount, how much we paid for it. So I'm not really tracking the units of inventory. And the problem is that when I sell it, I'm going to sell it over here. If I go to my home page, I'm going to sell it with an invoice or create a sales receipt here. And these are usually the driving documents that will record the decrease in inventory if we're using a perpetual inventory system. And to use these two forms, you have to set up inventory items for them to be decreasing the inventory properly. So if you just record a transaction that you're just increasing the inventory by cash, these two forms won't then be decreasing the inventory. Now you can kind of work around that. You could say, okay, what I'm going to do is use a periodic system instead of a perpetual system. I'm just going to record all my inventory to an account here on the books called just inventory. I'm not going to track the units in QuickBooks, but rather track the units in a worksheet such as this, where I'll count the inventory, and then I'll periodically count the units that have been sold, and then I'll simply make an adjusting entry that will decrease the inventory that has been sold and bring it to the physical count of the inventory. And then I'll record the other side to cost of goods sold on a periodic type basis. Therefore, I would not have to record items in the system. I can just do a journal entry to make that periodic adjustment decrease in the inventory account, recording the expense related to cost of goods sold. And when I sell things using the invoice or sales receipt, I'm not going to record the decrease in inventory and cost of goods sold side of things. I'll record it just like it's a service item, and I'll account for the other half, inventory, cost of goods sold, with a journal entry on a periodic basis as opposed to a perpetual basis. In other words, not when I make the sale, but at the end of the day, week, or month. So that's the second method you can use, or you can try to set up the items, of course, set up the inventory items in the system and track the inventory items as you go. But when you do that, just note that you're going to have to put one more step into the system. You can't just rely on the bank feeds. So let's break that down with regards to the bank feeds. I'm going to go to the banking dropdown. We're going to go to the bank feeds, and we'll open up the bank center. I'm going to go over to the uncategorized. I'm going to go to the cog to the right. I'm going to make sure everything is checked off. I'm going to adjust the filters. Now I'm having a little bit of an issue because when I sort by the columns, it kind of kicks off the filters that I'm on, and that's why it's a little bit more difficult to enter 1 month at a time. So let me just explain that as we go. I'd like to sort it with the oldest months first here, but when I do that, it shows all transactions. And when I filter it, for example, to just the checks, I'm going to filter it to this range. So I'm going to say 2 months. And so I'll pick up that range. And then I find the date ranges work well, because if I then filter within the date range, it won't, it'll kick off the other filters that are involved. So if I have the checks here, and then I was to say, okay. And then now it filters it on the newest ones on top. And if I try to resort this line item, it'll kick off the filters. So hopefully I'm sure that QuickBooks has heard about that, and it's kind of annoying, and possibly they'll adjust that shortly so that then you can filter by the oldest month here within, and it won't kick off the other filters that you have in place. So in any case, I'm looking at these two items. I'm going to pretend that these two items are inventory items. So we're purchasing inventory. So there's a couple different ways we can put the inventory on the books. Let's do this one first, and let's do our easy method this time. I'm just going to say this one's just going to be going, I'm just going to take it to cost of goods sold right away. And that's it. I'm just going to expense it at the point in time I purchase it, and I assume that I'm going to sell it very close in the same time frame, and therefore I'll just make the sale with an invoice and in the same range, and I won't put it into inventory at all. And so in that method, I could say, okay, let's say the payee. I'm going to set up the payee. Similar process here. It's going to be a vendor. I'm going to type the name up top. Primerica we'll put up top, and we'll put that into the company name just as we have seen before. I'm going to say okay on that. And then the account. Now, if I'm not tracking the inventory and I'm not going to put it into an asset account of inventory, I'm just going to expense it as we go, being on a cash basis method. Then I'm just going to say add a new account, and I'm going to say this is going to be a cost of goods sold type of account, and I'll simply call it cost of goods sold, and that's it. And so it's cost of goods sold is a subcategory, a special kind of expense account, but it's basically just an expense account. I'm going to say okay on that, and there we have it. And then I'm going to hit the add button over here, and I'm going to say more details, not the add button, but the drop down, more details. And then you might want to put in the memos here, inventory purchase, and you might want to put the unit amount, just so you have it, maybe the description of the units and whatnot that you can put here that you have. And then cost of goods sold. Now if you're applying it specifically to a customer, then you could then tag it to the customer. So say you have a customer that's basically, or you make a custom order for that customer, and then you're going to create basically an invoice from this information. You could then put the customer here, and say I add a customer, and then it's going to be Smith is our customer. This is who we're going to sell it to later, and I'm going to add that, quick add it. Now we have a customer we're going to set up. This is a customer now. So if I hit the OK, I'm going to then say it's billable, meaning then I'm going to bill that customer. So I'm going to then say save it and okay. So now if I go to the vendors dropdown, vendor center, and notice I didn't make a rule with it because we're going to do something different next time, but I'm going to go to the vendor center, and now we have the new vendor. If I go to the customer center, drop down customer center, now we have a customer here. So there's our customer that we set up. If I go to the home page, then when I create an invoice, I can create an invoice to that customer, and it'll populate with the bill. So I can say, let's invoice. Now I'm going to bill the customer, Smith, our only customer. And then it's going to say select outstanding billable time. And I'm going to say yes. And there's the outstanding billable expense right there, and I can check it off, and then I can basically bill the customer with that line item. So that's one way you can do this. And if you're very close in time doing custom orders, then you might get away with that. You know, you might be, even though you're basically recording the cost of goods sold before you're actually making the invoice. But again, if it's close in time and you don't have a lot of inventory, maybe that would certainly be the easiest thing to do. If you go then to the balance sheet, then I say okay, same kind of thing. The checking account's going to go down, of course, by the amount there, which I think was the 30 this time. Going the other side goes to cost of goods sold, which is on the profit and loss. So down to the profit and loss, we have then cost of goods sold, which is another kind of type of expense and another subcategory, decreasing net income. We have no income, so we have a loss at this time because we haven't entered the deposits yet. So that's one way you can do it. Let's do another one. Let's go back to the center for bank feeds, and let's say the second one, I want to upload this one, but I want it to be going, I want to track this using a method such as this, and then I'll do a journal entry periodically. So I'll do a periodic journal entry. I'll count my inventory, and then I'll adjust for it periodically. So I can say, okay, then I'd have to put it into an inventory account. So I go, okay, I'm going to put it into inventory. So same process. I can say the payee is going to be, I'm going to say Primerica still, but I'm not going to send it to cost of goods sold. I'm going to set up a new account, and I'm going to call that account not an expense account, but an other current asset account. That asset account being inventory. So it's going to be inventory, and then I'll say save and close. And then do we need to edit? I can add more details if I want here. We might want the memo again. So inventory units, we might describe the units that we purchased. Inventory units, you might describe the units, and then I can save that, and let's look at the difference. So now it's going to be on the books. If I go to the balance sheet, this transaction still is going to decrease the checking account, because obviously we got this from, decrease the checking account. The other side this time going to inventory. So if I then go to inventory, it's on the balance sheet. It didn't record anything to the P&L. It's on the balance sheet as the dollar amount. It doesn't show us the units. We're not tracking the units in the system now. What we would then have to do is basically count the inventory. And you can imagine this just like if you were selling, sandwiches during the day, and you say that I have this many sandwiches in the morning, and then I'm just going to sell them for whatever I sell them for. And at the end of the day, I'll count how many sandwiches I have left. And the difference between the two are how many sandwiches I sold, right? You could do a worksheet externally such as that, and then track your inventory like in a first in, first out, and then make an adjusting entry, which would decrease the inventory for the units sold on a cost basis, and then the other side would go to cost of goods sold. So you would just make a periodic adjustment daily, weekly, monthly, or something like that. And then you wouldn't be tracking the inventory in the system. Now, what if you wanted to track the inventory in QuickBooks and use bank feeds? Well, then you got to do another kind of setup process, because that means you have to turn on inventory, meaning you go to the edit dropdown, preferences, and you got to go down to the inventory items. And then you want to make sure you have inventory turned on. And then you'll be using a perpetual inventory system. And say, okay, that means you're going to decrease the inventory when you make a sales receipt or item, but you'll have to set up an item that you're going to sell. So I'm going to say, if I say lists, and I'm going to say that we need to set up an item, and it's going to be an inventory item. I'll set a drop down, and I'll say I need to set up an item to track the inventory. New item, it's going to be an inventory part, and the part I'm just going to say unit 1, and that's the thing we sell, whatever it is. Unit 1 and unit 1, and then the cost, I'm going to say it's $50, and it's going to go to cost of goods sold. Primerica is the vendor, and then the other side, we're going to sell it, let's say for, $80. So this is the sales price that we expect to sell it for, and the income account then, I'm going to say is going to be, we'll have to set one up. Did they give us an income account? No. I'll just call it sales. It's going to be income. It's going to be sales. We'll say And then that's it. So now we have an item set up. So I'm going to say okay. So now if I close this back out, when we sell it, then we're going to go to the invoice, and I'll sell it, and we'll have an item, which will be unit 1, which means we'll sell it for $80. And then it'll track it. So I'm going to close this back out. Now if I go to the bank feeds and say, okay, how can I enter that unit into the bank feeds? Like if I go to the bank feeds and I say we have this one for $50 Primerica, and I try to look at the details on it, I have nothing here to enter the items to. I don't have an items tab. I can't enter the item. I can't enter the thing to track the item. So the way we would have to do it is enter the bill and then match it up to this item. So I can then say, okay, let's go to the home page and I'll enter a bill, and you'll see how where the difference is here. This is one way you can do it at least. And I can say the bill is going to go to Primerica, and I'm going to make it on, let's say it's going to be 051820, and the amount then is going to be for the $50, and then it's not going to be on the expense side, but the item side. The item means inventory item in this case, and that's going to be our unit 1 inventory item. So now we have our inventory item. We're going to buy quantity 1 of them, right? So we're going to buy 1 of them, and then I'm going to say save and close and say yes. What that does, if I go to the balance sheet, it's going to increase the payable, accounts payable. Now we have an accrual item, so we had to deal with an accrual payable of that, and then the other side went to the inventory, which it set up another inventory account now because we're tracking inventory with this inventory account. And then I'm going to go back to the bank feeds, and then if I was to take a look at this $50 transaction here, now I'm having the payment. I would like to match this payment to the bill, meaning pay off the bill, because this is what's actually coming out of the bank account now. So I can hit the drop down, and I might go to like add. You could go to match here. I'd go to add more details at least first, and you got the second tab, which is a matching tab, and then there's the bill that I'm trying to match it to. So now I'm just going to match it to the bill, the bill increase the accounts payable. And now this is going to decrease the accounts payable, the amount that's owed, and then decrease the checking account. So the bill increased the inventory, and then it increased the accounts payable. This is going to decrease the accounts payable, decrease cash. So I'm going to say, all right, tied it out, and then I'm going to say save and add, yes. And so now if I go back to the balance sheet, then now the accounts payable has gone back down to 0. So we entered the bill, and then we paid it with the check. And notice the form that's used now is a little bit different form, still generated from the bank feeds, still looks like a check, but the bottom of it, instead of just having that line item where we can put the account for expenses, now has the paid bill item. And then if I go back out up top, now we've paid off the bill. So now we've paid it off here. So here's the bill. And then we go to the inventory. The inventory is now on the books. And now when I sell the inventory, if I go back to the home tab and I was to sell that unit of inventory, I can create an invoice and sell it to Smith and say, okay, well, let's not add that. And then I'll sell it to Smith here. And now I have the units 1, and we could sell that inventory unit for the $80. And when I record this, it'll decrease the inventory automatically. Even though that amount isn't on the invoice, it'll do it perpetually. It'll decrease the inventory and record the cost of goods sold. So if I was to save this, save and close, and say yes, and cancel, I'm going to remove these 2 items. And then I'm going to say save and close. And then we can go back to the balance sheet. And now the inventory, that second inventory account is gone. In other words, if I go to the reports drop down, I'm going to look at the trial balance and go to 010120 to 123120. And so now the inventory that we were tracking with, this inventory asset account, has now, it increased and then it decreased with the invoice. It decreased by $50, even though that $50 is not on the invoice because we only have the amount that it was sold for. So it decreased that amount, and it recorded the other side to the cost of goods sold, and it made another cost of goods sold for the inventory tracking. So here's the cost of goods sold on the other side of the transaction. So it will also track inventory now. So if you go to the reports drop down, inventory, and I want to look at the inventory valuation summary. So the inventory increase and it's back down to 0, of course. But if we look at the activity in here, and I change the date from 01/01/20, then we see the activity. So it'll track the flow of the inventory, giving us the cost and whatnot on it. So if you don't have an idea of how you're going to use the inventory, you might want to look into inventory flow. We have a course on inventory flow, first in, first out, last in, first out, average, and then specific identification, periodic method versus perpetual method. Those two are key. Do you want to use a periodic method or perpetual method? If you use a perpetual method, which is the last option we had here, it's a lot more complicated. You can have a lot more problems unless you set the system up right, because you have to set up the items and whatnot. If you use a periodic method, it can be a little bit easier. Smaller companies might use a periodic method, and you can depend more on the bank feeds. If you use a periodic method, if you use a cash method, then again, that would only really be good if you sell things, if you don't have a lot of inventory on hand. As we saw, that was the first option.